On our previous class, we talked about candlestick, but unfortunately, on our live previous class, which we did on YouTube, network couldn't allow us to complete the section. At some point, the screen I was sharing stopped sharing. It's just as if I was just talking to myself. So, as I said, we talked about candlestick and we also talked about time frame. But due to the network issue and the technical issue we were having, we couldn't complete it. But before on our today's topic, before we continue with our today's class, I would like to throw a little bit light regarding that candlestick and also time frame. And from our definition, what is candlestick? Candlestick is a visual representation of price movement over a specific time. It also enables traders to interpret price formation quickly. So this candlestick you are seeing here, from the environment we are using, this is trading view for those that are new to trading. This environment we are using to do, we only use this trading view for analysis. We don't place on trade on trading view. So we only use it to do analysis while we place our trade on the MetaTrader 4 or MetaTrader 5. And for the MetaTrader 4 is the old version of MetaTrader 5. That is, MetaTrader 5 is the new version of the MetaTrader 4. So they are all the same. You can use anyone that suits you. It's just that the difference is the new MetaTrader 5 has a lot of functions and user friendly than that of the old version, which is the MetaTrader 4. So as I said, I'm going to explain a little bit about this candlestick. Candlesticks, combining it with time frame, you from the screen you are seeing, you can see we have the red bars and we also have the green bars. So the green bars are representing the price movement of the market. That is, when if price is moving from point A to point B, that is, if the price is appreciating, price is going up, then buyers hope in to buy the market. While if the price is coming down, you will see it will continue printing red candles. So regarding the color you are seeing here, it's nothing. You can choose any color you want from the settings. You can change it to blue. Some people changes the green bar, they change it to blue, while they leave the red bar, which is for the sell, which represent the sell, they leave it on red. So it doesn't mean all the only information, the only thing you need to know is just know how it works and how these candlesticks are moving. So each candlestick you are seeing, from the time frame I am on daily time frame. So each candlestick you are seeing here, let me zoom it a little bit so that you will see it clearly. So from these candlesticks now, each candlestick, since I am presently on the daily time frame, from the side of my screen here, where my cursor is, which is the left side of my screen, you can see numbers up there. These numbers are what we call time frame. And from this at this point, you can see my cursor is on daily time frame. So this time frame you are seeing, imagine it together with candlestick you are seeing on the screen. Each candlestick you are seeing here took one good day for it to grow from the opening price to the closing time of this candlestick you are seeing. So by the time I switch back to 4 hours, you will see there is changes on the in the formation on the candlestick. So I'm trying to explain here, like it's trying to say each candlestick on this 4 hour where my cursor is. Presently we are on 4 hour time frame. So each candlestick you are seeing here, it's from the time it opens down to the time it closes. It took it 4 good hours. Same thing to the 1 hour time frame and also that of 15-minute time frame. So how does this candlestick work and how do we interpret it and how do we use it to place our either buy or sell. Candlestick, it's nothing. It's just a price interpretation for you to know, okay, if the price is moving up, then you will start seeing candlestick. You will start seeing the candles. They are printing and it printing green, irrespective of any color you put it. It will be growing up. Let me switch because on this time frame you are seeing from these points, we have a lot of time frame starting from the 1 minute down to 12 months. But as a day trader, I'm a day trader and I only do my analysis on daily time frame down to 4 hour time frame down to 1 hour. Then I execute my entry on 15 minutes. So as I said, I'm not going to do more deep explanation on this candlestick. All you just need to do is do yourself a favor by doing more research, do your own research to know more about candlestick. It's nothing. Don't mind the definition, don't mind how it grows. All you should just concentrate now is how does this candlestick grow and how will I interpret it to make money with it. So it's candlestick is not our today's topic. I'm just trying to, throw a little bit light about it, combining it with time frame. And for the time frame, as I said, from the upper corner of my screen here, from the left side of the screen, this is what we call time frame. Time frame. Time frame. What is time frame? Time frame is nothing like it's just trying to tell you that this is a particular time. But anytime any of the time frame you switch you switch it to, it will interpret, it will show you the time it took for a particular candlestick to grow from the opening time and to the closing time. Sorry, I'm not good at definition. I'm not good at explaining things. I like doing practical. I like, we do it practically so that you will see what is actually happening. But for the time frame, let me put one or two things down for you to be able to understand how this time frame works, combining it with the candlestick. So let me put something down for you to be able to see. I believe you are together with you have your pen and a paper, jotting one or two things down so that you won't miss out on the class. So we say time frame. Sorry, time frame. And what are the time frame we use to do our analysis? We do our analysis as a trader because from the beginning of this class, of this section, on our previous class I talked about the type of traders we have. We have the day traders, we have the swing traders, and we have positional traders, which I did an explanation regarding that. But on frame today, on our today's topic, we'll be talking about the base currency and the code currency. And the base currency and code currency, these are currencies, like these are an abbreviation of the country currency, the country name and the currency involved in trading this financial market. So let me put down one or two things for you to we are going to talk about the base currency and the quote currency. And what did I mean by base currency and code currency? Let me increase the font size so that you can be able to, see it clearly. What did I mean? What did I mean by base currency and code currency? Base currency, this refers to the first currency that appears in a currency pair, while the code currency is the last currency. For example, we have GBP USD, GBP USD. list. So this DBP you are seeing is an abbreviation of a country, British. So, and from the name, this is how the currency pair is being made. It takes from the two sides, if you can see, this is Great British Pound. The first two letter represents, let me put it so that I like doing things practically so that you can be able to see what I'm trying to, teach here. The G and the G and the B, it's called Great British Pound. That is the country name. Then the last letter word is the currency name. Are you understanding what I'm trying to teach here? The first two letter words represent the country name, while the last letter represent the country currency name. This is US, this is United States, while the D is the dollar. Are you understanding? Okay, let me add one more, which is the euro. Euro is EURUSD. You see, euro, while USD, United Dollar. So we are not here to explain all these things. All we are here to do is for you to just understand how it works and how it moves, and how you can be able to combine this information and trade for you to just make money. So me as a mentor trying to teach you, you don't expect me to teach you everything. You need to find time, do your due diligence, do your own research to understand how these things are. They are just the basics for you to know so that you get yourself familiar with this to get yourself familiar with the basics, the countries, and the countries that are involved in trading these financial markets. So let's move on to our next topic of today. Let me put the topics we are going to be talking about. I said base currency and quotes currency, which is one. This is which is the first topic we will be talking about, which I did explain. And then the second topic we'll be talking about today is the lot size. Lot size in forex trading. So all these things is just for you to just have an insight about it. Then by the time we start practical, you get to understand how it works. I don't want to just go straight ahead to the practical because I believe so many people that are joining us on this our free online class, they are newbies. They are people that are just coming in to learn how to trade forex. And without these basics, without you knowing these basics, by the time we fully start practical, start placing trade on this application, I ask you the MetaTrader 4, MetaTrader 5, and the trading view, I ask you to people to download on your mobile phone. By the time we start using them practically, you will get. I don't want you to get confused when I say use so lot size to place so trade. Use so currency. We are doing analysis on so currency to to enter the market today. You won't get confused. Just for you to get familiar with this particular. That is why I'm throwing a little bit light on each of it. So the lot size is a standardized number of units of an asset being traded. So it's nothing, it's just a lot size in forex. This refers to a standard size of a trading contract. You can see it from the top side of the when we start the practical, I will show you where you are going to see the lot size and how it's being used. So we have there are types of lot size in this market we use, traders use. Types of lot size we use in trading. Types of lot size. I said one, we have the standard lot size. Or let me say A. A standard. Sorry, I'm not good at typing. Standard. As I said earlier on, all these things are just basics. Just for you to know it, the most important thing is know how to analyze the market, know how to make money, and that is why we are here. Just we are here for me to teach you how to make money. But before you start practical, you have to undergo the theory part of the. You have to go undergo the theory aspect of the whole thing. Then we put it into practice. Then we have the mini lots and we have the micro C. We have the micro lots. Are you understanding and am I carrying everyone along? So it's just for you to know all these things. Then the next topic we'll be talking about is pips. Pips, which is three. Three. We're talking about pips. And what is pips? Pip is an abbreviation of, let me put it down so that you can, it's just an abbreviation of this acronym of this price interest points. That's what we call pips. Price interest points. Points. Why some people call it percentage percentage in points. That is what we call pips. And this pips is a tools for measuring. It's a tools of measurement related to the smallest price movements made by the change, like the price movement of a number. Let's say, um, uh, let me let me put it this way for you to understand. It's a two pips. I don't know how I'm going to put it for you to just understand what I'm trying to say. Okay, pips is a movement, is a tools like used in measuring the price movement of a currency. Like when a currency is moving from my screen, here, you can see it's it's a green bar moving up, which shows that the price of this GBP USD is moving up. So the movement it's moving from one point to another, it's what we call pips. The addition of the number, since it's appreciating, when it's moving from zero, let's say we have 0 points. Okay, we have, let me use the the current price movement of this Great British Pound to US dollar, and the current price is 1 point. From where my cursor is, from the right corner, from the right side of the screen, you can see where my cursor is. We have 1.314776. So anytime this number moves, if it is appreciating, you can see if it is appreciating, this particular last number will be moving from 6, it will move to 7. Are you seeing? It will move to 8. It's appreciating, move to 9, move to the next number, which is 8.81. So I don't know if you are understanding what I'm trying to teach here. This is what we call pips. The currency are usually quoted in four numbers, then in four decimal points, measuring the smallest changes in a currency would be currency pair would be in the would be the last digit that it's moving. By the time, if you understand mathematics very well, you will understand what I'm trying to explain here. That is, while we are in primary school, they used to say hundred, tens, and units. So this, by the time the last number is appreciating, if it is moving, adding up, the movement is moving from one number to another. It's what we calculated in forex as pips. It's simple. It's something that is just very, very simple for you to understand. So we are done on these pips. Let's go to the next topic we are going to discuss today, which is stop loss in trading. Stop loss and take profits. A lot of people that know people that are trading, you'll be hearing them talking about stop losses. It hit my stop loss. Oh, the price has moved up to my direction and it hit my take profit. So this stop loss and take profits you are seeing, it's just an order profits. Stop loss and take profit. Stop loss is just an order that is designed to limit a trader's potential loss on a trade. You are going to, it's an order like in this particular application we call MetaTrader 4, MetaTrader 5. You place it and you give your broker an order, trying to tell your broker that if the price move it from this point and it's moving against me from the point I enter my trade, this is the amount I'm willing to risk. I don't want to risk more than this particular amount. That is what we call stop loss. While for the take profit, if you should enter a trade from a particular point and it's moving in your favor, this is the particular point you want. If the price is reach, it will take you out automatically. It's an order you are going to give. You are going to set it. It's just a number. By the time we start doing practical, you will be seeing what I'm trying to explain here. It's simple. It's not just one big English, big grammar. So let's take an example. From this point now, we are on this trade. Let me use this functionality you are seeing from the left side of my trade. You can see long position and short position. So if we are, let me take a sell as an example. Assuming we entered our trade on this point, this thing you are seeing, this function you are seeing, let me widen it for you to be able to see. This particular function you are seeing, you can see it has two parts. It has the green part and it has the red part. It's just a function that you will just use while doing your analysis. It will give you, you will place it, you will only use it not to, it's not that we are using it to place a trade, but we are using it as a point telling you that, okay, this is the, if I'm using this functionality, this is where I enter my trade and this is where I'm going to put my stop loss. For example, we entered a trade at this particular point, you place it, then this is where I want to put my stop loss. This red are moving up. This is where I want to set my stop loss. So that by the time the trade is going against me, if it moves up and it take it if the bars are moving up and it goes out of this red portion, that means I'm stopped out of this market with loss. But if it's moving in my direction, it's moving in this red point you are seeing, the market is moving in my direction. It's simple, it's very easy. All these things, I don't want you to see it as a big, you know, it's not difficult. It's actually very, very easy, but it will take you time for you to master it. But with me, with our channel, inshallah, by special grace of God, you will gradually will be putting you through for you to master all these things. They are very, very easy. So this functionality you are seeing on the screen is for sell, while we also have that of buy. If I'm expecting a trade, if I enter a trade and I'm expecting, I did my analysis and I know the market is going to move in my direction, I put the functionality and I set my stop loss below my entry point and I drag it up. This is where I want if the market to reach, I will set this particular number, the particular number you are seeing from the right side, greenish, is telling you that if the market reaches this particular point, I want my broker should automatically close my trade and credit my account with profit. It while in other way round for the stop loss, if I entered a buy trade and I'm expecting the market to appreciate, but unfortunately market did not appreciate from the point of my entry, it's now moving against me. The market is now depreciating. The price is depreciating. This is where I want, if the market should reach, it should stop me out. I don't want to lose more than what I have in my account. It's easy and it's very, very simple. So this is the definition of the stop loss and that of the take profit. So we are still on the theoretical part of the trading, introduction to trading. But on our next class, on our next video that I'm going to do, we'll be doing it practically. So if you have any question regarding the topic we treated today, you can go to the comment section, you chat me up, some things you don't understand, you ask a question and I will do well to look into it and I will reply you. And if you have a request for me to do a particular video on a particular topic before we move to the practical aspect of our trading, I will also do that. So thank you very much for coming up and I really appreciate. Do well to subscribe to this channel so that anytime we drop nice content, educative content like this, you'll be the first to see it. And not just subscribing, also turn up the bell notification so that you will get notified immediately we are live or immediately I drop a nice content like this, educative content, you'll be the first to see it. Have a nice day. Thank you very much.